Let's start by understanding your view on how you are analyzing Modi government's work in the first 3 years. We are having this chat at a time when they are finishing 3 years in office.
So I think now government is getting its acts together. So initially first or second year, there was a lot of skepticism about whether government will be able to get its way through and get the reforms done because they did not have a majority in the upper house. And also, I mean, most of the ministers were new. But now I think after 3 years, people are able to see the direction which is very clear, which is absolutely more or less, as what the party had promised before election. So they are moving on the reforms track, and they are getting many things that were not proper or that were broken, or they are just trying to set it right. So most of the ministries, I think have achieved quite a lot in the first 3 years. Of course, in 3 years' time for a country like India, your task or agenda is not over. But most of the ministries that we see, you look at power, a lot of work has happened in rural electrification. If you look at roads, then orders have started moving and highway construction has begun. Even in railways and defense, things were more or less in a stalemate kind of a thing. They got out of that. The policy in terms of about FDI also has been eased a lot. Number of other major big ticket reforms like GST, they're on track. And I think after UP election, government also has got confidence. More importantly, more than government, now people have got confidence in the government and investors. So when we meet large investors, or we meet even people who are retail investors, HNIs, first 1 or 2 years they're watching and their fingers were crossed. They just wanted to see how government performs. But now I think more or less people are getting very confident about the direction. The more RERA also has become a law. Bankruptcy law has been passed. GST is 1st July looks like very probable date. And even demonetization, sail through. Of course, it was a lot of surprises happened in that. So with this, I think government is getting confident. People are getting confident in the government. So it's a good situation to be in.
Nirmal, power, be it oil and gas, real estate, of course, RERA is there. Barring NPA resolution, which still remains a sticky area, which was most you were most impressed by the work done in the first 3 years?
So I think power and road, these ministries have done very well. And power ministry, I think, because what it inherited was not a good state of affairs in terms of raw material, as well as the way discoms and the way the industry was operating. So, so I think power, and road sector, these sectors have done very well. But other sectors also are moving in the right direction now. They may be a little slow, but they're moving. But you are right that, if you ask me one big task that is not done, which is NPA resolution of the PSU banks, because PSU banks still are a bit directionless in terms of what's going to be their future. So some courageous steps, either to set up a bad loan bank, or merge and consolidate and allow them to raise capital is required, because investors are losing confidence. These banks are losing market share. So either government should decide whether they want to be in this sector, for how long. I think this is one sector which needs very quick and urgent attention. Among the bigger things, I think this is one area which is left, where a lot of work has to be done still.
Right. Nirmal, also we are having this chat today when markets are at record high. You interact with investors across the board, be it retail, HNI, even institutional. What is the sense you are getting regarding how they are looking at the leadership in the political front?
So I think more or less people are very confident about leadership and the economy's direction. What they are worried about, maybe two things. One is valuations, because people think that valuations are run up too high, earnings are still to catch up. And when they look at the historical perspective, and the PE multiples were low in a low growth era and a high interest era, I think the new normal of PE will be much higher, because PE start with a reciprocal of interest rate, and you add growth and reduce risk. That's a theoretical framework. But as interest rates head down, I think PE multiples will get stabilized at a higher level, and as the growth expectations also build up, and people get more confident about future of the economy. And two, I think, as I said, there are two major risks or things that people are concerned about. Second is geopolitical, the global risk all over, because there are always a little bit of problems happening at the border or elsewhere in the world in terms of terrorism or terrorist attacks, as we saw, or the way large economy like US, and the leadership there will behave for visa, for pharmaceutical IT companies, or in general. So, and plus, even Europe is passing through a lot of turbulence politically as well as economically. And how will that impact India is always a concern. But as far as India is concerned, I think most investors are fairly confident about the way government is moving.
Right. We've also observed the last couple of months, in fact, last time when you were on our channel and now, that the flows have been unprecedented. In fact, some of your businesses are doing very well in getting flows into the market. Do you think this flow of liquidity is likely to continue into the market, both from domestic and the overseas side when you talk to your investors?
So I think there's a structural change that has happened in terms of flow of capital in the market. So domestic flows have become very strong. And I think this was something which was long overdue, because India as an economy has got almost about $500 billion of savings, and a very small part of that was coming to equities. And just $20–25 billion of FI money was, trying to, market was dancing to the tune of FIs, which, and what happens with FI money is that everything is all right within the country, but something goes wrong outside and your markets become very volatile and turbulent. And that's not good for retail investors. So one structural change that has happened, that the local flow, the domestic flows have become very strong. And this will make markets more stable and less volatile. Don't go by, of course, equity markets will always be a little volatile. You can't expect equity markets to rise steadily like debt market, interest rate or whatever. But given the, say, compared to historical trend, equity markets will become fairly more stable. Second is, as far as foreign flows are concerned, most of the foreign investors want to invest in India, but many of them basically, either exited or did not come when the demonetization was in process. So now they are looking at valuations that they run up, so they're waiting for a correction. But in a medium to long term, you'll see money coming from foreign investors as well as domestic investors to the market.
Okay. But what are your thoughts analyzing all of these factors regarding the market, both on the benchmark, the larger cap universe, and the small cap? We speak to a lot of people, opinion is divided. One section is worried about valuation, other section is confident that earnings will catch up going forward. So which side are you on?
See, if you look at last 3–4 days performance of mid cap, that will tell you the story. The thing is that mid cap is a very heterogeneous sector. There are too many, maybe 500 companies kind of a thing. So companies that are doing well and their earnings are good, they're able to stand and they're able to withstand the volatility, and the fall is much lesser. But where results are not good, or the stock price has run up too much, then the correction is also very steep. So the volatility in mid cap universe will be much higher as compared to large cap. So in mid cap and small cap, you'll always find some gems and some stories if you do a bottom up stock picking, which are very good. But you can't take a call on the entire segment or the sector as a whole. Relatively speaking, it's easier to take a call on large cap, although within large cap also there will be variations, but still it's a smaller universe in terms of number of stocks. But I think you have to build a portfolio of good stock, large and small and mid, put together.
If one were to talk about the earnings, the way earnings are flowing in last quarter and this quarter, and also in balance, look after how the government is working in which areas. So which sector looks most promising to you if one were to talk about 2–3 year story?
So 2–3 year story, banks will do well, but industrials and capital goods should also come back. And oil marketing companies should also do very well, because I think the valuation is still very attractive. And if the government or RBI, if they find some good solution for PSU banks, then the valuations are attractive there too. But then unless they find something, some solution, it's very difficult to, but sooner or later they have to solve the problem, and valuations there are attractive for people who want to take contrarian bets for long term. But I think more or less the whole market will move up in tandem, but of course, industrial or capital goods or road sector, they might give better returns.
Sir, also I want to understand that this government has got 2 years more, and after the way UP election result panned out, certain section of the market started taking it granted that perhaps the next term would also be theirs. If indeed in the next 12 to 14 months earnings come back in a big way, are you confident about the direction of the market beyond the day-to-day movement? What are your thoughts there?
I think, yeah, beyond day-to-day movement, markets will do well over 3 to 5 years. So the trend of the market for a medium to long term will be up.
Okay. So let's shift focus and talk about your company, because it has been gaining market share over the last 1 or 2 years. Numbers are following very good. Almost 800 crore in profits done. You spoke about 1,000 crore in sight in profit. That looks achievable. Tell us what's working for IIFL. It's one of the good performing stocks in this space.
So we are in financial services, which is a leverage play on the economy. If the economy does well, financial services will also do well. Within that, now we have been there for now 22 years. We built our brand, processes, systems, and most importantly, quality of people. Because in a financial advice, what you need is competent people and people who are trustworthy. So that's what we have built over a period of time, and I think that is what should help us to grow. We invested also very aggressively in technology and digitization, which is helping in reducing the operating cost and improving customer experience.
So two areas of your business which are particularly very high growth, NBFC and the wealth arm, and has started to get traction in terms of value also now. What are the targets you've set yourself, or what direction will it move in these two areas?
So targets are in line with, as I said, that we have 2020 vision target where between FY16 to FY20 we want to multiply our post-tax profits by 2.5 times. But I think all these businesses are growing in line with the sector, or maybe slightly better than the sector. That's what our targets would be.
And one of the ends of your business which was perhaps not getting too much attention from your side, and now we are hearing positive news flow, is the 5paisa.com. Do you think the listing is on track? Tell us a little bit more about it.
Yeah, so it's a company is being demerged and it will get automatically listed. So the existing shareholders will get pro rata shares of the company. So for 25 shares of IIFL, you get 1 share of 5paisa. So this company is completely different. It's completely technology driven, no RM, no branches, no research, no, so it's all no customized research kind of a thing. So it's all can operate from a centralized office. So it's for digitally savvy customers who can do it on their own, and they pay much lesser brokerage.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.